Wednesday, January 31st, Stan Ehrlich and market analysis. You know, I start out with the stock market indexes and typically with the E-mini. This is the March E-mini futures contract. We have a big break today. I've been waiting for this, talking about it for at least a week. A couple of days ago, the big rally threw me off. Wasn't looking very good. Yesterday, slightly lower, basically fiddling around, not doing too much. And today, boom, we are currently down about 40, and that translates into approximately 4 points on the SPY, and we'll see that chart in a minute. We haven't quite made lower lows than just 2 days ago, not quite yet. That's about the same low as the day before that, and the low 1 and 2 days before that are just a little bit lower. So if we start making new lows today, or in fact the next couple of days, which is exactly what I expect, then we're going to probably hit a lot more sell stops below previous lows and start to get down to my first support area, which is my minimum downside objective for the E-mini, around 4,840-ish, give or take a 5 or 10 up and down. There is the distinct possibility that the market could come down as low as 4,720-ish, give or take 30 or something. And that is the bottom of the trading range of December and early January. I doubt that it's going to go too much further than that. One way or the other, I'll try to pick the turning point back up, of course, and I do expect that, and I do expect new highs for the whole trend, probably middle, late February, something along those lines. Could happen even sooner. Next, Spider. Essentially all the same commentary, just different prices. We have made new lows below the lows of the previous 3 days for the SPY, but it's not really falling apart. The market is down quite a bit, 3.5 on the Spider, and not even that close to the low of the day. So there's a good chance we could still make new lows for the day and stay down there in general and continue to work lower. Right now, we are basically at the lowest close in the past 4 days. So even a little bit lower is going to be a new low close for 5 days. So still, I'm expecting it to move down to approximately 480 on the Spider, maybe the bottom of the December, January trading range, approximately 468, but not necessarily as low as this particular support area. Next, the 1 minute chart shows that we've opened a lot lower. No rally of any significance. Boom to new low ground right away. And 4 or 5 times we have poked away at 486.5, a little higher, a little lower. And now at the moment, 7.5, 47.40, which is where it stopped a couple, 3 times. So are we going to stop again right here and start to make new lows for the day? That would not surprise me whatsoever. Even a little bit more of a rally and then back down would be in the cards. But this is a good spot for it to stop and start slipping again. Yep, exactly what it looks like. So we will be down on the day if it makes new lows. Another 7.5 right here, 6.5 right there. Another 4.5 lower, and starting to get closer to 5 lower, which is pretty darn big move these days for the Spider. Next chart is the DIA, which refuses to get lower on the day. It continues to hover around a little bit lower, a little bit higher, and we are now up 60 cents at the moment. We are overbought. We did make a new high for the move today, and if we do start to collapse a bit and get below yesterday's lows, I will have an official red sell signal on the DIA next, and that's if. The Russell 2000 is not the same story, and for a month more here or more, we have had a different situation. It topped out in overbought conditions in about a new high for about a year, but that it was nowhere near historical levels, which the Qs and the DIA and the Spider have been challenging and breaking for 6 weeks or something. But the Russell's different story. Major historical resistance did stop this last very big rally. And now we're kind of between a very wide rock and a hard spot. So I'm looking for a test of recent lows, the lows that were made around the middle of January. And that could hold, but I'm not looking for a bear move. None of the indexes am I looking for a big bear move. Only downside corrections lasting a short period of time and not that big a deal, and then into new high ground. Next chart, QQQ, gapped down today. Since gaps are almost always closed, and maybe it's heading down to close this gap, and that was on January 18, January 19, maybe even a little bit lower to close a gap that was only 1 day earlier. So those are my two downside objectives. They're fairly close together, and they are right around where the market used to top out twice. So that's the beginning of decent support. Makes a lot of sense. Leaving this gap behind is okay because, as you expect, I would say, which I am, after this dip is over, we're going to go back up and not only close this gap from today, but we're going to make new highs for the whole trend. And we're looking at the NASDAQ March futures contract, same commentary. I'm going to show you bonds and 10-year notes in a moment, which do not correlate with what the indexes are doing today at all. In fact, they're doing the exact opposite to what I would normally expect. And normally it works out that way, but you'll see in a moment. So 1 minute NASDAQ basically trending lower, including a gap on the QQQs, not really on the March futures, which did gap down, but it closed its gap on a little rally, took a while, and down you went. Futures. We're looking at the S&P 500 from a different point of view, but the commentary is the same. And by the way, you can contact me at info@ersignals.com. info@ersignals.com. Now, no change in commentary. Continuation contract or perpetual are the same thing. There may be a little variation on the way they're calculated, and normally they're not exactly the same price as the nearby futures contract, but very close. Patterns are the same. Up and down percentages are very, 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 very similar, the same. And it's an excellent contract that doesn't expire. So you can look at long-term patterns and cycles, for example, that you won't be able to see on the individual futures contracts. Next is the QQQs. Same thing I said before, 7,153 looks like my first downside objective for the NASDAQ March futures contract. Next, bonds and notes. Look at the rally today in bonds, quite substantial. I'm not surprised, but I would have expected strength like this in the interest rate futures, which means rates are going down, to be supportive of a rally in the indexes, and that's not the case except for the DIA, which can't rally. It's stuck very minor amount higher on the day at the moment, 50 cents. And we're down 330 on the Spider and 470 on the Qs at the moment. Quite a significant amount lower. And the 10-year notes are doing the same thing. I am bullish intermediate to long-term on interest rate futures. You've known that for a very long period of time, way before the October and September decline and October lows, which we did get a buy signal smack dab on the bottom. 10-year notes is off the bottom by a very small few ticks, and the bond buy signal is the bottom day. Back to notes and crude oil. Overbought, got close to resistance, didn't quite get there. Looks like it's turning around. New low for 4 days. Coming out of overbought. Probably going to get back to support at 73 1/3 and dig into it as it did before. The key here is, on a long-term basis, if we start getting below 67.80, you have a major longer-term downside breakout, and will probably break all these lows made back in the early part of last year. Intermediate to longer-term bearish, short-term there's a chance it could pop up just a little bit more, hit the resistance, and then nosedive. So I'm basically bearish. No signals yet. We have an outside up day on natural gas, which is a bullish engulfing Japanese candlestick, but where there's no oversold condition, we got close, doesn't count. So I'm not getting a green bar today, which I would have otherwise if we were oversold. We are looking like a minor double bottom. That's something to be watching. And it is very close to previous lows made a month ago. So a little bit of a rally out of this would not be a surprise. I don't think it's going to go very far. Certainly, I'm not looking for it to move up to 3.060, for example, maybe halfway back up. But there's a significant resistance area also starting at these lows back in late or early June, and that's 2.6.5. So some sort of rally, but not for very long, and not a huge one. And then new lows for the whole trend on a longer term basis. Next chart is heating oil. Overbought, not quite in resistance, starting to turn down, but today is a little higher momentarily, and it's a doji, no higher than yesterday, no lower than yesterday, and an inside trading range. We say doji doesn't mean too much, basically indecision. Next, gold. Remember, I had a head and shoulder top outlined in this futures contract, but it just simply was too strong, too often, closing above the neckline too much, and this continues to rally way too much. Yesterday, I erased the markings for the pattern, and now I'm back to basic support, did hold. We're now popping out of it. Looks like this market wants to rally more. I don't have a strong feel for it at the moment. No signals, not that close to overbought. I got to wait a little, but it does look short-term friendly. But I'm not very convinced about the longer term. It could very well still be building a broad top. Next, silver. Same kind of thing, although we do have a minor high, and then current quotes are a little lower than yesterday's close. So, maybe it's dipping back down a little bit. Can't come to a great decision here, but this does have an overall image of being a lot weaker over a long period of time, damn near a year. So bias is neutral to bearish, but I haven't got any signals. Nothing particularly special. Next chart, platinum. Higher high, currently about unchanged. Same kind of thing for platinum. All three of them are not doing stuff that I really want to latch onto and be more certain, or not the word certain, more confident in my commentary. Next, high-grade copper. Basically hit resistance. So we're between the rock and a hard spot, and we just hit one of them. And that's today's high, almost right there. So I think there's a very good chance it could drop right back down to 3.7 something. Next, soybeans. Yesterday, and along with corn 2 days ago, has a bullish engulfing ER buy signal. Green. All of the criteria necessary happened, and I now have an official buy signal for this particular trading system, ER signals. It could develop into something as nice as that last one over there, which was a really good rally overall. This one lasted a few days and was very worthwhile. I have no idea whether this one's going to be good or not. What I do know is that today's low is 12.06 3/4, and my bid established yesterday and before the opening is 12.05. So far, I missed by a penny and change. Darn it. Very, very close. Close doesn't count, but in hand grenades and horseshoes and nuclear weapons. So I missed it. Bullish. Looking for higher levels. Real quick. Bean oil. Oversold, bouncing a little bit. Not so sure here. This definitely looks bearish. So I think there's a good chance we're going to see new lows very soon and get oversold a little bit again, maybe bouncing slightly in a downtrend, making new lows probably every week. I can't really come to the conclusion this oversold condition yesterday was particularly profound. Next, Meal, soybean meal, maybe it'll rally a little bit more, but major support has held it on this last break. This rally could last several days, maybe even a week or two, but I can't get overexcited about anything on the upside. There's nothing super bullish about this situation as far as I can tell. So overall, friendly, a little bit short term, but a little bit looking for sell signals, frankly, and basically neutral to bearish. Next is corn, which I mentioned a moment ago with soybeans, has a buy signal yesterday, not 2 days ago, and it is the low on a double bottom formation, although very small, only a 2 weeks in size. That is on the small size. Closer to a month is getting to be more normal. Maybe 2 or 3 months is getting to be normal to a little bit big. Anything over, say, 4, 5, 6 months and more would be very large. So this is relatively small, 2 weeks, but still there, still good, and it's looking awfully nice. The buy signal yesterday exactly on the low so far. Today's only the next day. And guess what's happening? Just like soybeans, today's low is 443 and a quarter, and my bid is 442 and a half. That means I've missed by less than a penny so far. And it looks like ER3, which is trying to get long at the green dot, may not. Too bad, missed by so little in beans and corn. Now, ER1, remember, is still long from the signal day yesterday in both cases. Next, wheat. And no signal here. We did get a bullish engulfing yesterday, but it not green because we weren't oversold. Beans, yes. Corn, yes. Not wheat. So this is a fairly broad, nice support area that's beginning to show some usefulness since October. In fact, there's some other things about this trading range that look very, very interesting, that if we start to make slight new highs here above 618, I'll start to talk about that pattern, which you might see already yourselves. Next, overbought conditions in resistance started 5 days ago and is still persisting. Even though a couple of days ago we poked out of the high of it, we closed back inside the red zone and we're stuck there for the moment. But that's supposed to stop the rally because we were also overbought at the same time we rallied up into resistance. All I need to do is start to see this thing slip a little bit, and we'll make new lows and new low closes for 5 days or more and start the move down, I would expect. Looking for lower levels. Next, hogs. Overbought a little bit above resistance, probably topping out. My resistance level may be not quite so accurate. Maybe I should have made a little bit higher. That looks still very acceptable, but so did the other one. So basically, I think it's topping out and starting to turn back down and get back down probably to 77, and it would not at all rule out 73. Next chart, OJ. Well, resistance is not stopping this. We're still overbought, third day, chugging up into new high ground for the rally. You remember that our ER sell signal picked the first shoulder on a head and shoulder top on October 31, the exact high day to the day, November 21, the head of the formation. I talked about this date being 1 day later. It turned around 1 day earlier than expected, and I thought it was going to get up a little bit higher. Go back and listen to my YouTubes on 12/11, for example, last year, and you'll see the charts and the markings before it broke out, which it did, and it came all the way down to my minimum downside objective, less about a point. Very, very, very close. And now we've got this big rally. I think it's in a prime spot right here to stop. Looks like a real good level. It ain't doing it yet. We'll find out in a day or two. Cocoa did make a new high again. We had a sell signal that did not work. Too bad. And now it's overbought again. So there's a possibility of sort of a double top. I think it is topping out. Remember my green and red ER buy and sell signals are not always the exact high or low, although they are frequently. They are sometimes part of the topping out or bottoming out formation or trading range that usually takes a week or two, or maybe even a month or a little longer. And I'll see maybe 2 or even 3 of these bullish or bearish engulfings during that process, but hopefully one of them will be the exact highest high or lowest low, and sometimes they are. Next, coffee. Is this darn head and shoulder going to really form or not? Yesterday, I wanted to say no, but it closed poorly. And today we're back down just a smidgen. The rally of yesterday really didn't kill the formation that much, but you can see it's kind of getting lopsided to the right, not deadly amount. And it was getting a little higher than I thought it might get to. The high, frankly, on January 24th was right in there. Good timing, good price level, and it started to head down for one day. So I don't know. Let's see how this develops. I think it could be a good head and shoulder top in coffee, but I'm a little skeptical at the moment. Sugar. Resistance area stopped the rally, pulled out of it to the downside, but yesterday we started to pop back a little bit. I still think it's probably in the process of topping out, and we should see new lows for the move any day now. Maybe by the end of the week, but probably next week. So I'm neutral to bearish. Next is cotton the rag. We got a sell signal a few days ago. We got short ER3 the next day at the red dot. It closed with a profit on the first day, so ER3 scalp did make money, probably. And ER1 almost probably also, ER1 scalp made money. Now, ER1 overnight has maybe gotten stopped out because of the amount of strength in the last 3 days, but maybe not, I'm not sure. Signal in general is not violated. And what I don't like is this is a minor new high in 3 days since the signal, and probably a slightly higher close again today. So the signal's not really catching on yet. I want to see a close below 83.60 to feel a lot happier. Right now, I'm not. I'm pretty iffy and concerned the signal might not work out. Next, E-mini, back to E-mini. Still looking for lower levels, maybe new lows for the day. I see we've been relatively stable since the beginning of this. Down 360 on the spider at the moment, up only 20 now on the DIA. That did slip a little. And while I was yickety-yakking, we're down 490 on the QQQ at the moment. You guys have a great day. Info at ersignals.com. If you want to reach me, mañana.